Foreign direct investment driving development. Sustainable growth through knowledge transfer. Technology as a solution. Innovation as a way forward. Over 70 ministers, 140 countries, over 500 exhibitors, 8,000 square meters of exhibition, 15,000 businessmen and investors. The annual investment meeting, sustainable development through FDI-induced innovation and technology transfer.
Two sessions, and we'll start our first session with the Islamic finance mechanism for high-end industries, with the first topic, which is Islamic mode of financing for promoting private sector. The speaker is Professor Dr. Muhammad Azmi Omar. He's with us. Doctor, you can the floor is yours. You can introduce yourself and start the presentation, please. Thank you.
Thank you very much ladies and gentlemen, again, welcome to the session. I am fortunate to be the first speaker and being given the opportunity to speak first. So we will have the time to monopolize the discussion. Let me introduce myself. I am Azmi Omar. I'm a Malaysian, but working in Jeddah, Saudi Arabia. I'm the Director General of Islamic Research and Training Institute of the Islamic Development Bank. So before I go on to talk about the Islamic modes of financing, let me just give a brief introduction about IDB. Maybe some of you may be familiar, some of you may not be. But of course, the more detailed discussion about IDB will be shared by my colleagues later on. IDB was established, or Islamic Development Bank was established in 1975. Then the Research and Training Arm, IRTI, where I am heading, was established in 1981. Followed by ISAC, IEC, that is this insurance arms of the IDB, which was established in 1994. Then ICD, the main sponsor of this event, was established in 1999, focusing on the private sector development. And finally, we have ITFC, the Trade Finance Corporation, which was established in 2008. As you know, IDB's role is Islamic Development Bank Group, which means that we were the first Islamic development bank in the world that operates on the Islamic finance principle. Okay, Islamic finance principle. So in this particular context, when the bank was established, the bank realized that there is a need to do research to look at the development of Islamic economics and Islamic finance. So the role of IDB then and until today is to conduct research, to be the intellectual arm of the IDB group, to look at the development of Islamic economics and finance. So we undertake research in economics. When we say economics there, we meant Islamic economics, Islamic banking, and Islamic finance for the benefit of member countries, IDB member countries, and non-member countries as well. Secondly, we provide advisory services and technical assistance on Islamic banking and finance to IDB group member countries and non-member countries. Third is we provide training. There are two types of training. One is we provide training to government officials, to policymakers on implementing Islamic banking and finance. Secondly, we also help universities in the context of developing curriculum in teaching, because we realize that at the end of the day, when you establish bank, you need to have skilled manpower. So we help to develop the skilled manpower by developing the curriculum as well as training the government officials. And third, and finally, is information services, where we develop and update and maintain information and publication of Islamic finance. So if you go to our website, you will see a lot of publications on Islamic banking and finance. And these publications, the soft copies or the e-version are available for free, where you can download for free. And we have published in English, in Arabic, in French, in Russian language. Why Russian language? Because we had an annual meeting, IDB annual meeting in Kazakhstan, in Tajikistan, so we translate into Russian language. And this year we're going to have our annual meeting in Maputo, Mozambique. We are translating some of our publications in Portuguese as well. So that's part of the mandate to promote Islamic finance globally. So now coming back to the idea of Islamic banking and finance, although my topic is on Islamic modes of financing, but let me give you a broader perspective. If you look at the development of Islamic finance, I don't think you can see clearly from far, but like all good economists says, let's assume you can see. You know, economists are good for making assumptions. So my assumption today is let's assume you can see clearly. You know, so what you can see is that, of course, Islamic banking developed in the Middle East, and it has then spread over to Southeast Asia in the 80s, and the Indian subcontinent in the 80s. And then from there on, it has gone into many countries in Africa, in Central Asia, and also in North America, where you have some Muslim financial institutions, not exactly bank, but financial institutions established in Canada, in US. And now we are seeing interest in Central America as well as South America on Islamic finance. So again, we see there's a lot of interest and development for Islamic finance. And a number of reasons we can say this. One of the reasons is due to this 2008 financial crisis, where investors are looking for alternative source of financing and source of funds. So that's one big impetus. Secondly, many studies, including studies that were done by IMF, World Bank, confirm that Islamic finance is more stable than traditional or conventional finance. So there is a lot of interest because of those financial crises. So many countries are looking forward. And if you look at the growth rate on the far left there, you will see that the growth rate of Islamic banking particularly, in a number of countries, are in excess of 15%. You will see in GCC, 18.5% annual growth rate. In Asia, 12.24%. In the MENA region, almost 18% growth rate. So you can see there's a big demand for Islamic finance across the globe. And in terms of number of institutions, we also see that countries that have allowed the Islamic finance to flourish, from 35 in 2012 to 37 countries, we see a number of financial institutions offering Sharia compliance from 307 to 349. And we also see, as an example, number of commercial banks that offers Islamic banking from 178 in 2012 to 185 in 2013. Okay? And if you look at in terms of the banking assets, the Islamic banking assets have grown over the years, with the exception of Iran and Sudan, where it is they are 100%. But if you look at within this region, Saudi Arabia has 50% Islamic banking assets, which means that if you take total banking assets, 50% of the total banking assets comprise of Islamic banking assets. You have Kuwait almost 45%, and then you have Brunei, Qatar, Malaysia, which is almost 20%, and other countries. So you see there is a very good number. And in terms of financing, from 2009 to 2012, you see Bahrain, Bangladesh, again, financing growth rate in excess of 20%, with the exception of 2012. But you find that in a number of countries, financing growth rate of Islamic finance is more than 10% per year. And that's a significant development. Similarly, in the context of deposit growth, in excess of 10% in many countries. In fact, more than 30%. Here we are only looking at banking. We have not looked at other non-bank financial institutions. For example, if you look at these CGAP is one of the World Bank Institution, they did a study on microfinance, Islamic microfinance. Again, Islamic microfinance is growing very well in many countries. So why is there an interest for Islamic finance or Islamic banking? The one is the issue of ethics. Islamic finance focuses on ethics. It will avoid unethical activities. So financing will not be on speculative or unethical activities. So it's more akin to what we call ethical investments or ethical financing, avoidance of gambling, riba, interest. And secondly, it focuses on what we call risk sharing and partnership. Risk sharing and partnership. And this is the issue now. If you look at what the solutions to the current crisis would be, you need to focus less on leverage, less on debt, but more on equity, more on partnership kind of financing. So in this way, both financier and investor, financier and a business will work together in order to develop business activities. And this is what we call risk sharing activities. And thirdly is the issue of governance. Islamic finance requires not only very strong governance, corporate governance, it also requires what we call Shariah governance. That means that to ensure that the operations comply with corporate governance as well as Islamic law governance, which is called Shariah. So you have additional Shariah requirements. As an example, suppose a bank were to invest in or to finance a particular project, and subsequently that project may have questions about ethical activities. The bank may not be able to continue financing because it involves the issue of ethics. And finally, it deals with real economy, which means that it does not dabble into what you call financial leverage. It goes into supporting the development of the real economy. Hence, financing is geared to production of real sector. Okay, so Islamic finance moved originally from basic retail product, has now evolved into commercial as well as capital markets. So in the 80s or in the early 80s, the focus was more towards giving alternative to individual customers. Subsequently, in the 90s, we see a lot of commercial products, and now in 2000 onwards, we have a lot of capital market products, such as sukuk, which is known globally now. And we have many countries that have issued sukuk. In Africa, we have Senegal, and then Gambia is about to issue sukuk as well. I mean, although they have issued domestic sukuk, but now global sukuk is one of the tools that is seen by many countries. UK has issued sukuk. And for your information, even in US, there was a sukuk issued early on, although that sukuk experience wasn't that good, but they had one issue, a corporate sukuk. So retail Islamic offering, commercial offering, as well as investments. Okay, let me just go quickly, because we don't want to spend too much time on this basic principle. I'm sure some of you are very familiar, but just to share with you, my experience when I was in Malaysia before joining IDB Group, I was also a consultant to a number of banks in Malaysia and Brunei, where we did conversion from conventional bank into Islamic banks. So as the practice became more sophisticated, Islamic banks now are able to offer, as I mentioned earlier on, not only individual retail products, like for a customer who wants to get mortgage financing or vehicle financing or personal wealth investment. Islamic banks have gone into more sophisticated products, providing solutions to corporate clients. So essentially, the principles that are used in solutions to corporate clients, here again, why we focus on corporate clients, because we want to focus on the development of the SMEs as well as the private sector. You see, generally, Islamic banks use three categories of Sharia principles to help finance clients. What we call the sale-based modes of financing, the murabahah, salam, istisna. I wouldn't want to go into explaining the thing. I hope some of you, but in case you need to understand more, maybe after the break or during the discussion, we can explain further. So we have on the murabahah, the cost plus, the salam, advance payment, istisna, the contract to manufacture. And then we have the risk-sharing principles, where mudarabah and musyarakah, and varieties of partnership or participation-based financing. Then we have the lease-based financing, which is this operating lease, the ijarah, mouthful to pronounce, ijarah muntaya bitamlik. I always, it will be a mouthful for some to pronounce, but essentially what we have is the varieties of leasing contracts. that are used and has been used in order to support the development of corporate clients. So which means that essentially what happens is that when a corporate client goes to a bank will then provide the appropriate financing mechanism in order to fulfill the needs of the client. As an example, if you look, one of the key things is the issue of trade finance. You want to import goods, you want to export goods. So how does Islamic banks provide that financing? In some countries, you may not find this full comprehensive range of products for the simple reason the bank may not have sophisticated skilled manpower. And that's one. And they do not have experienced people. So, but in a fairly good or well experienced Islamic banks, you will see they will be able to provide a comprehensive range of products from letters of credit, working capital financing, import financing, export credit refinancing, letters of guarantee, and then if you want to acquire assets, be it commercial property, vehicles or equipment, as well as project finance. I think in the regard of project finance, IDB is well known, having a long experience on project finance. Just to give you rather quickly an overview of those instruments, for example, letters of credit, if a customer wants to obtain letters of credit, one of the things would be if a customer does not require financing, but more of getting to issue letter of credit, then an Islamic bank could issue under the principle of agency, what we call Wakalah LC. If a customer requires financing, it can be under principles of cost plus or murabah or profit sharing arrangement. So that has been done. Subsequently, if a customer requires working capital financing to finance his working capital operations, then murabah is used. And sometimes it's also called, in some countries, they call it tawaruk structure. Similarly, in the context of import financing, a customer wants to have imports, so there are a number of ways that a bank can structure. One is typically the bank purchases and sells to the client under murabah, or secondly, the bank and the client joins together in a partnership, okay, for that particular venture, and the profits and losses will be shared between both entities in purchasing the goods and subsequently selling those goods to the end clients. And then export credit refinancing. Again, export credit refinancing may not be available to all Islamic banks in a number of countries. In those countries that have Islamic banks and have credit refinancing, one of the tools used is murabah, where a customer wants to export what we call it goods, and a customer needs financing to export those goods. So we have export credit refinancing under murabah. And finally, letter of guarantee, which is typically for trade finance, shipping and bank guarantee, but there could be also other guarantees like tender guarantees and so on, a performance guarantee, using the principles of kafalah or agency. And then for asset financing, a bank can provide financing to a customer through a number of structures, what we call diminishing musyarakah, as well as murabah. And property to be constructed, it could be istisna, contract manufacturing, or forward lease. Some of these instruments that I showed to you are also applicable to sukuk structure. You see, for example, when a country wants to issue sukuk, but to develop certain projects, these structures are used also. So structures used in banks are also used in sukuk structure, except sukuk structure would have to have some other modification, what we call the creation of SPV, special purpose vehicle, in order to create this issuance of sukuk. And then we have vehicles and equipment financing. This is this ijarah or contract which ends with the acquisition of ownership of the asset by the lessee. And finally, under project finance, and this is the instruments typically used, istisna, musyarakah mutanakisah, as well as ijarah mausufah fi zimmah, the forward lease. A good example of forward lease is where if there are Muslims who have been to Mecca, you will see the clock tower there, and that clock tower construction was through this forward lease agreement. Okay, forward lease agreement. So those are examples that Islamic banks and Islamic finance can provide to clients. So in a nutshell, to conclude is that Islamic finance has been in existence for more than 40 years. Although the basic forms of Islamic finance have been practiced in a number of countries, but the modern form where you have a bank, it has been in existence for more than 40 years. The first commercial Islamic bank was established in 1975, the Dubai Islamic Bank, and subsequently the same year, IDB, Islamic Development Bank, was established. So if you look from there, until today is 40 years. And the available modes of financing offered by Islamic banks, as I mentioned, are able to accommodate all types of needs of client, be it short-term or long-term financing needs. But again, it depends on the what we call it, the types of the requirements by the private sector. And a bank would be able to structure those requirements depending on the needs. And financing terms, which is almost very crucial issue, is the issue of what's the cost. Okay, cost of financing, as I mentioned, can be as competitive as traditional banks depending on the market. In some countries, Islamic banking cost of funds or financing costs would be the same or almost similar to conventional or traditional banks. In markets where Islamic banking is small, sometimes because the size is small, then their cost might be slightly higher. But by and large, if you move beyond Islamic banking, you go towards, say, for example, Sukuk, you will find that depending on the rating that a company or a government obtains, the cost that is being paid by the issuer of Sukuk will be almost similar to what the company or country has to pay if they were to issue conventional bonds. Okay, why? Because the market has expanded significantly. The Islamic finance market has expanded significantly. So because of that expansion of Islamic finance market, it creates a lot of demand. And one of the reasons why I also say this, especially when a company goes from SMEs to big corporations into very significant big companies, when you issue Sukuk as an example, you are tapping not only Muslim funds, but you're also tapping conventional funds. But if you issue conventional bonds, only conventional funds can buy, not Islamic funds. Which means that if you issue Islamic instruments, your market appeal would be wider. I think that's one of the positive advantage of issuing or implementing Islamic finance. I think with that note, I thank you very much. And anything you can contact, this is my email address. Okay, thank you.
And then if you have any question, please kindly address your question to Professor Omar. If there is no question, we can proceed for the next presentation. Thank you, Professor Omar.
Thank you, sir.
Go to the second topic, which is Islamic Financial Institution and High-End Industries, presented by Mr. Harith Haroon, the CEO of Maldives Islamic Bank.
Assalamu alaikum. Good afternoon. Allow me first to introduce myself. My name is Harith Haroon. I am the CEO of the Maldives Islamic Bank, which is part of the ICD group. Maldives Islamic Bank is the first Islamic bank set up in the Maldives. It's a small country with just over 350,000 people living there, but it has a thriving economy with tourism being the backbone of the economy, and followed by fisheries. ICD set up the Maldives Islamic Bank, or MIB in short, in March 2011. It was the first Islamic, as I mentioned earlier, and it was a test case for ICD in investing in a country where there was no Islamic bank before. And after 4 years in operation, I must say that the bank has done well in all respects. To pick up from where Dr. Azmi left just now, I will basically go through my real experience in developing Islamic finance in the Maldives and focusing on one particular industry. As mentioned by Dr. Azmi, Islamic finance has flourished over the past 40 years, and Islamic financial institutions are well poised to support the growth of high-end industries, particularly in emerging and developing economies. Islamic financial institutions provide a range of flexible modes of financing to meet the needs of businesses in all sectors, depending on the purpose of the financing, source of repayment, cash cycle, tenor of the financing, and many other factors. And it works on the principle of sharing of risk and reward, hence the responsibility to ensure the success of the project being financed does not rely solely on the customer. All three stakeholders, the bank, the customer, as well as depositors, will have to bear the risk for the investment. And IFIs operate not unlike a venture capital company. Islamic finance has evolved over the years to reach the level where it is able to offer a broad range of financial services to all sectors of the economy, consistent with Islamic principles. The development of Islamic interbank market and the money market, as well as the capital market, had propelled the growth of Islamic finance industry in the three major economies, as what Ernst & Young has categorized as the Kismut economies, comprising Qatar, Indonesia, Saudi Arabia, Malaysia, UAE, and Turkey, which accounted some 60% of the growth of IF assets over the past 5-6 years. I would like now to share our involvement in the development of Islamic finance in the Maldives, in particular in supporting the growth of the fisheries sector. The Maldives, as I mentioned earlier, is an island nation made up of some 1,200 coral islands located in the middle of the Indian Ocean, somewhere south of Sri Lanka. It has a very narrow economic base, with tourism and tourism-related sector contributing more than 2/3 of the GDP. The fisheries sector dominated the economy in the 1980s. However, its share of GDP has fallen to 2% currently. It has to be mentioned, however, that this sector remains very important and the biggest employer in the country. And for this reason, efforts are being taken by the government as well as the private sector to continue to modernize and expand this industry. For the Maldives, which has a very narrow economic base, the opportunities for investment are available in the tourism and the fisheries sectors, as I mentioned earlier. And there are different modes of financing under the Islamic concept, which financial institutions can apply. For example, the istisna, the construction financing, the murabah, the cost plus, asset purchase, and next, the ijara, leasing, diminishing musyarakah for asset acquisition, and trade, as well as for trade finance and export finance as well. So there are many forms of instruments and products that we can offer under the Islamic finance concept. And I wouldn't go through all these concepts. Dr. Azmi has already mentioned this concept. But let me go through with you with one particular industry that we are particularly strong in, which both ICD and the bank have been supporting over the past few years. ICD has come in to finance one of the biggest fish processing and export companies in the Maldives. And at our level, at the bank level, we also been supporting one particular company, which is one of the 5 fish processing and exporting companies in the Maldives, which is called NCIS. There are various types of, well, before that, the main export in terms of the variety of fish is tuna for the Maldives, right? And there are five companies that have been given license to do the processing and exporting of tuna, mainly to Europe and also to the US and Japan. And the company that we have dealt with is called NCIS Private Limited. And it is one of the 5 companies that is involved in the fish processing and export. And this company deals in the high-end tuna, which is called the yellowfin tuna, mainly exported to the UK as well as to Germany. And the MIB has been supporting this company since we started. And basically, earlier, at the first stage, we were involved in providing the financing for the construction of the plant, as well for the purchase of the equipment for processing of the fish. And subsequently, once the plant is already operational, we are now providing more of a working capital facility to the company. One of the main constraints faced by NCIS, and not only NCIS, it applies to all the fish processing and exporting companies, is that fishermen out at the sea, from whom the company buys fish daily, they insist on immediate cash payment, whereas overseas buyers are given credit term of up to a month. And for this reason, we have worked out a product for the company whereby we'll provide the working capital requirement of the company to enable the company to pay to the fishermen immediately as soon as the fish is loaded to the boat. What we do is basically we provide a working capital line of credit to the company whereby MIB will buy the fish from the fishermen and then sell the fish to NC's company. In that respect, it involves basically a murabaha structure, buying and selling of the fish to our customer. And this customer is given a term of 2 months to pay us back. So that it falls within the 1 month credit term which the company has given to the buyers in the UK. So this has worked very well, and this has helped the company to expand its operation. Apart from that, we also provide facility for the company to buy machinery to expand its operation and to modernize its factory as well. So this has enabled the company to increase its sales to its market in Europe and to a smaller extent to Japan. Another sector which we have not yet entered into directly is the tourism sector. Being in the Maldives, and operating a bank in the Maldives, we have to be involved in the tourism sector because the tourism sector accounts for 1/3 of the GDP directly, but indirectly, combined, it makes up to 2/3 of the GDP of the economy. Right now, what the bank has been doing is basically to provide facilities to companies that support these resorts. The nature of the tourism industry in the Maldives is such that there are over 100 resorts in the Maldives, and these are all located in individual islands. It's a one resort, one island kind of concept. And these are high-end resort, and it costs anywhere from 50 million to 100 million to build a resort, really high-class premium resorts, and it's mainly catering to the high-end market. And for MIB, at this stage of our operation, we are only able to provide financing to the companies that provide this support to these resorts. For example, the suppliers to these resorts, the contractors, as well as the suppliers for installation of the equipment, refrigeration system, for example. This is where MIB has come in. But another area that we feel has a lot of potential in the Maldives is what we call the halal tourism, or targeting this market to the countries where there are high-end outbound tourists, big tourism market. This is where Maldives has not yet captured, and this is where we feel that the bank is well placed to assist investors who have plans to set up what we call as the Muslim-friendly resorts. Resorts in Maldives were designed and were meant to cater more for the European market. And there are certain features of the resort that needs to be changed or need to be redesigned to cater to the needs of the Muslim market. This area which I strongly believe that has huge potential in the Maldives. So basically, what I've been trying to explain is that this is our investment in the Maldives. I see this investment in the Maldives is basically a showcase of how Islamic finance can operate in any economy, whether it's a huge economy like Qatar or in Malaysia, even a small economy like the Maldives, or even smaller countries like there's still opportunities for Islamic finance to make inroads and to flourish. And again, as I said, Islamic finance is an option that's available to investors, and it's not just confined to the Muslim market. And it can work in any kind of what you call economic situation. What's important is how we structure these products to meet the needs of the customers. I would like to end this short presentation is basically just to thank you very much for being here with us. And if there's any question that you may want to ask with regard to my experience in the Maldives, I'm happy to answer your questions. Thank you.
Again, there is any question for Mr. Harith? If not, then we can proceed now after finalizing the first topic, which is Islamic mode of finance, and tackling the subject on the point of view of Islamic financial institution. Let's now talk about a niche of Islamic high industry with the Hajj Management and Service and Saving Mobilization with the CEO of Taha Alam, Mr. Nick Joharis. Please, if you can proceed.
Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. And very good afternoon, ladies and gentlemen. Bismillahir Rahmanir Rahim. Alhamdulillah Rabbil Alameen. Salatu wassalamu ala shafi anbiya wal mursaleen. Wa ala alihi wa sahbihi ajma'in. Thank you for being here, ladies and gentlemen. The presentation that I'm going to give relates to one of the most important activities by Muslim, which is one of the pillars of Islam, to do Hajj if you are able to do it. So the existence of this company, Taha Alam, which is based in Malaysia, is one of the noble initiatives initiated by IDB as well as Tabung Haji of Malaysia to assist as many Muslims in the world to manage logistics as well as savings to help and assist the Muslim to go to Hajj in a safe and reliable manner. Why Taha Alam was established was because we have seen in many countries in Asia, Muslims have to borrow money, pledge their properties, because the travel agents and the travel operators in this part of the world are very good in marketing their products, that they take loans, they have to borrow money, take loans from travel agents to go to Hajj and Umrah. Little that they know, when they come back from doing Hajj and Umrah, they can't pay back the travel agents. And they have to let go their properties, their mortgage, because of doing something which they are not able to do in the first place. They're doing something which they feel is to fulfill their obligation as a Muslim, because it's one of the pillars of Islam, but they forget that if you're unable to do it, you don't have to do it. So Taha Alam was established in September 2002 with 50% equity by both IDB as well as Tabung Haji through its subsidiaries ICD and Tabung Haji through its subsidiaries Tata H. Berhad. Our intention is not to create another institution in any countries that we have established relationship, but to assist and to create a more sustainable structure or a more sustainable institution which can help the Muslim to do Hajj and Umrah with effective cost, safe and reliable. That is the aim of Taha Alam. And we are now in contact with 20 countries, but because of the socio-economic difference and the difference in the political climate, the approach will be different with each country. To make all of you, ladies and gentlemen, understand the benefits and why this is one of the important institutions that we should together develop in each of our countries, let me highlight to you how Tabung Haji has done it for the past 50 years. Then you be the judge on how we could work together to create a more sustainable institution in each of the countries worldwide. This is the mission of Tabung Hajj. It's very simple, to allow Malaysian citizens to perform their Hajj satisfactorily, safe, and at effective price. Effective price doesn't mean lower price every year, but managing the price so that it does not increase substantially every year. The supply side of accommodation or logistics in Mecca is beyond our control. We just can't gauge what would happen next year or the next 5 years. So Tabung Haji has done a structure which manage them to manage the price, the cost of each pilgrims every year to be at the same level for the past 10 years. I'll show to you, I'll highlight to you on how this has been done successfully. Firstly, Tabung Haji was developed in terms of history. Tabung Haji was established in 1963. It was an idea from one of our academicians, Professor Engko Aziz, who is the father of the current governor, Tan Sri Zeti, to introduce a halal saving scheme for the Muslim for the purpose of for them to develop enough savings to go to Hajj. When it was first developed, Tabung Haji only have 1,281 Muslims depositing their money, with only deposit amount of 46,000 Malaysian ringgit. That is around 15,000 US dollar. So for the past 50 years, until end of last year, December 2014, the fund has developed to 51 billion Malaysian ringgit, with depositors of up to 8.6 million Malaysian citizens. In Malaysia, we have around 17, 18 million Muslims, so it's not 100% Muslim has deposited, but the value has increased from 15,000 to around 15 billion US dollar. It looks a lot, ladies and gentlemen, but if you look at the amount per depositor, it's only US dollar 1,600 per depositor. So you have, so from here you would see that we have Malaysians have the rich, which are depositing a lot of money, and the poor, which are depositing probably enough money for them to go to Hajj. So the rich are getting two things. The rich are getting the ibadah for subsidizing the poor for them to go to their Hajj, and at the same time, when there's excess money, which Tabung Haji could obtain for them investment, they get deposits, they get returns from their deposits, and the poor are benefiting from it, alhamdulillah, as a Muslim. So when Tabung Haji when Tabung Haji was established, it was established by way of Act of Parliament. This creates another argument whenever I speak to a lot of countries in the world. Tabung Haji was developed by Act of Parliament, so you have full backing from your government. So by having this Act of Parliament, people say that Tabung Haji can centralize their operations in one roof. They can collect deposits, they can do investments, and they can do Hajj operations under one roof. But not necessarily so. I mean, with the development of Islamic finance industry currently, you don't need government intervention. You have reputable Islamic banks in your own country. You have choices of investment opportunities in your own countries. That is essentially what Tabung Haji has done the past 50 years. And remember that Tabung Haji was established in 1963 when Islamic finance has not existed during that time. Islamic finance in Malaysia was first established in 1983, where Bank Islam, or Islamic Bank of Malaysia, was established, and the Act was enacted in 1983. But it was more of it was more of this concerted effort and the desire to take care of the Muslim and to make sure that no Muslim do not have the opportunity to do Hajj. So throughout the years, the Tabung Haji developed the extensive branch operations to assist their depositors on their deposits, and as well as to manage their Hajj training and guidance, etc. And Tabung Haji also have an investment department, which is looking at how investments should be invested for the benefit of the depositors. And the most important thing, which any countries, if this were to be implemented, is that the returns, 100% of the returns from these Hajj deposits is used to cross-subsidize the Hajj operation of Tabung Haji, or in your countries, if it were to be developed in your countries. Just a brief introduction to the standard operating procedure of Tabung Haji. This is what Tabung Haji does in terms of managing its Hajj operations. They have 20 modules. The first modules are in Malaysia, the Hajj management in Malaysia, and the second half of the module is Hajj management in Saudi Arabia. So Tabung Haji would do everything from registration before each pilgrims go to Mecca. They will do guidance or training. They will use the returns from the investments to provide free medical examinations, and they also manage the passports, manage the flight charter, do the visa management, and it will go on up to managing the logistics in Mecca, holding hands of the pilgrims in Mecca, making sure that the food services as well in Mecca, up to the departure of the pilgrims from Mecca to Malaysia. Because Tabung Haji's deposit structure is based on saving schemes similar to a bank saving scheme, i.e., you can put your money today and withdraw tomorrow. So most of the investments of Tabung Haji is in liquid instruments. So it's listed equities and also debt securities. This would able Tabung Haji to withdraw, to liquidate their investment whenever there are withdrawals. For your information, there's no limit in investing in Tabung Haji. Malaysia, it's just that Tabung Haji, by way of Act of Parliament, is only for Malaysian pilgrims. So the income from the investment also, majority, would come from the listed equities and also debt securities. Alhamdulillah, for the past probably 20 years, the return to depositors has been very, I would say, has been above the saving schemes in Malaysia. Currently, the saving scheme in Malaysia is around 3 to 4% every year. Tabung Haji could give around 6.5 to 7% every year on Malaysian ringgit. And during the good years, it has gone up to, the depositors' return has gone up to about 10%. What makes this possible? Sincerity. Sincerity among the employees, among the directors, among the board of governors, the board of trustees, to make sure that every single cent coming from investment of depositors' money goes back to the depositor. It's not government intervention, it's the people. Alhamdulillah. So, Tabung Haji's successful business model. One, yes, you can say it's full support from the government of Malaysia. So that gives Tabung Haji the authority to collect deposits. Government also gives guarantee on deposits. Every single cent deposited in Tabung Haj. And that allows Tabung Haj to centralize its operation, which actually provide consistent security to depositors that their money will be in safekeep of the government. But other factors that makes Tabung Haji so successful is because of the structured investment strategies. The returns of this investment has been subsidizing, cross-subsidizing the Hajj operations, not anything else, not for political money, not for government spending. And Tabung Haji also realized the importance of having an extensive branch operation, like similar to banking sectors. Once you have an extensive branch operations, you give people the reach to be close to you. And along the years, it doesn't happen overnight. For the past 10 to 15 years, Tabung Haji has been accepted by a lot of Malaysian stakeholders, and you have support from banking sectors. Now, deposits can be deposited, can be withdrawn from a lot of ATMs in Malaysia, from banks ATM, commercial banks ATM, Islamic banks ATM. It can be done, transactions can be done online. You have support from religious teachers from each of the states. Malaysia has 14 states. Each of the states, you have support from Minister of Health, Immigration Office, police, airport services, etc. To give you an example, the support from police is that when the pilgrims were to depart from Malaysia to go to Mecca, they will get police escorts to escort the bus to the airport. And they don't have to go through the immigration line in Malaysia, they just go straight to the aeroplanes. That is the kind of support you get. And this is because of the corporations, nothing else. Because of the corporations among the Muslims in Malaysia to assist. It started with to assist the poor for them to go to Hajj. Ladies and gentlemen, application of Tabung Haji, as I said earlier, we have been in contact with 20 countries. None has introduced any structure, any Tabung Hajj structure, even though it's not a complete. Either it's a complete and or part of it. Why? Because everybody, there are a lot of reasons. Because of different socio-economic and political climate. Two main reasons are, people keep on arguing Malaysia, Tabung Hajj is backed up by government. So it's a lot easier to do it. Number two, the current Hajj and Umrah landscape in other countries in the world is controlled by travel operators, not by government or government-linked institutions. So it's more of, to us, it's more of the desire of the operators, the current operators. If you see the chart, the diagram that I've made, it's more the desire of these two institutions in charge of Hajj in a particular country and the travel operators. How do you want to assist your pilgrims in your country? We are working towards benefiting the pilgrims, i.e., the economic benefits of individual travel operators in each country is enormous in Hajj and Umrah business. Every year, there are more than 2 million Hajj pilgrims, and probably more than 10 million religious visitors to Mecca. So the economic benefits are a lot. But every year, the costs of this logistics keep on rising as well. There will be certain period where people are arguing that the cost of accommodation will go down as well in the near future because of oversupply of accommodation. So people are looking to reap the profits out of this. But we are looking at how to manage this cost on behalf of the pilgrims. So the mentality, the mindset have to change towards helping the poor to go to Hajj and Umrah. We are seen as Taha Alam, honestly speaking. I've been in the company for a year. We are seen as disrupting the current operations of Hajj and Umrah operator in any countries in the world. But we are not established to go inside any countries to set up another institution. No, we are not. We are going into each of the countries to establish either an operating a management company or a saving scheme to assist the pilgrims to save money, and in the future, it won't happen in 1 or 2 years. In the future, 5 to 10 years down the road, you have enough, a sizable amount of savings for you to subsidize your own Hajj operation. How does that work? Let's say we have a target of $1 billion US. If you have a Muslim of around 1 million, then the structured savings is only $100 US per month for you to reach $1 billion in 1 year. We learn from Tabung Haji. Tabung Haji took 50 years to make 50 billion. I would imagine other countries can do 5 billion in 10 years. With this, for example, a 5 billion fund in one particular country, you would have a structured investment managed by your own locals to develop returns from the investment. You don't have to look beyond or any businesses which is beyond, which is very sophisticated. Just look at the investment which is available under the Hajj-related activities. That's good enough. Properties, transportation, properties, accommodation, Mecca, Medina, transportation, food, travel, all these Hajj-related activities which benefit the pilgrims directly. So from the returns, looking at the Tabung Haji structure currently, from the returns that you get from the Shariah compliant businesses, you cross-subsidize the Hajj management and also the pilgrims. In Malaysia, currently the cost, which is available publicly, currently the cost of for each pilgrims is 16,500 Malaysian ringgit. That's around 4,500 US dollar. So Malaysia, Tabung Haji subsidized 40% of it. Tabung Haji subsidized 7,000 Malaysian ringgit for each pilgrims. And after that subsidy, all the money, all the excess return from investment is given back to the depositors in terms of 6.5% return. That was last year. So that is the whole structure. You just imagine the situation in Asia market where people keep on borrowing money to go to Hajj and Umrah. The effects can be crippling in the next 5 to 10 years, probably in 15 years, that people will feel that they get cheated to go to Hajj and Umrah. So indirectly, we are giving a wrong message to the Muslim, on Hajj and Umrah. This is one of the ways for us to combat that. Ladies and gentlemen, in brief, this is Taha Alam activities. We provide advisory consultancy for Hajj and Umrah, setting up of Hajj Management Company or Hajj Funds and Savings Scheme by leveraging on the expertise of Tabung Haji and also ICD. In that, we also provide training for the trainers, for the ustaz, to manage the Hajj operation. Because of the contacts that Tabung Haji and ICD have with the travel and logistic providers, we're providing all the logistic services related to Hajj and Umrah. And we're also providing technological services, which to assist the Hajj pilgrims and Umrah pilgrims when they do their Hajj and Umrah. Ladies and gentlemen, Quickly, I think you would know already, the spillover effects to the economy. With the amount of funds that you're going to raise or saving schemes you're going to raise, it will develop the whole economy system. This is based on Malaysian experience. And more importantly, to the Ummah, it will be the halal source of investment to the Muslim. The economy of scale is already been proven by Tabung Haji. It has reduced the overall cost to Malaysian pilgrims. It has, and the system, the management company has made the procedure to go to Hajj very systematic. It has been giving competitive returns above the saving rates for Malaysian pilgrims. And more importantly, to Malaysia, it has increased the opportunity for pilgrims to perform Hajj. Lastly, ladies and gentlemen, let us sit together, because if we were to be able to introduce this to any of the countries in the world, it will not only deepen our spiritual obligations as a Muslim, but also develop our economic as a whole. Wabillahi taufiq wal hidayah. Assalamu alaikum warahmatullahi ta'ala wabarakatuh.
Thank you, Mr. Nick, for your presentation. Now, the presentation of Mr. Nick is now closed the first session, and now we will talk about ICD contribution to the high-end industries. And I think we will start by Mr. Farid Masmoudi, who will talk about ICD role and contribution in high-end industry. Thank you, Mr. Farid.
Bismillah ar-Rahman ar-Rahim. Salatu salam ala Sayyidina Muhammad. Ladies and gentlemen, Messieurs, Mesdames, very nice welcome to all of you. I think we're going to take some time to present to you ICD, which is the Islamic Development Bank private sector arm. ICD stands for Islamic Corporation for the Development of the Private Sector. So my presentation will introduce you what ICD is doing, what ICD will do with some of your member countries, some of the people in that room, and also what are the criteria for us to invest and to support the private sector in all our member countries. So there was a question of high-end industry and Islamic finance. I found out that high-end industry are appealing to kind of sophisticated and discerning customer. In the same time, I think my colleague from IRT has precised that Islamic finance also is appealing to discerning customer, what we call Sharia compliant customer. I don't want to make it a shortcut, but I want to say that Islamic finance is then a high-end industry by itself, because it targets some customer that want some sophistication, that don't want to have like this ready-to-use product that they can find on the commercial market. So as long as ICD is using Islamic finance to develop its operation, I'm going to present you what is ICD and what we're doing to support the private sector. So ICD has been introduced earlier by my colleague from IRT. ICD is part of the largest Islamic financial institution in the world, which is Islamic Development Bank. ICD is owned 47% by the Islamic Development Bank, and then by 52 member countries, and also by 9 public financial institutions. ICD has some sister company in the Islamic Development Bank group, like ISEC, which is focusing on insurance and investments, how to support and to invest and to cover the investment and the insurance in all the member countries. Islamic Research and Training Institute, represented by the Director General, Dr. Sme, and also ATFC, which is the trade finance arm. In terms of ICD strategy, we belong to the same group, so we have the overall objective for 2020, which is in our mandate is to promote the private sector. How? By helping creating jobs, provide Islamic finance capabilities in all member countries. That means it's an access, provide an access to finance in all member countries. And how we are going to reach that objective. We have identified 6 main pillars. One is to encourage the cross-border investment. We want to help all the companies in our member country to invest in other member countries. We want to also promote the private sector development in all our member countries. What does it mean? This means that we want to create an enable environment where private sector, let's say regulatory framework, will help the development of the private sector and then will create jobs. We want also to provide and to promote Islamic finance service and products. We all know that there is existing conventional financial system, but in a lot of member countries and a lot of population, now they're calling for alternative financial system, and Islamic finance is an alternative financial system. And today, our mandate, our mission is to make sure that we can provide and promote this alternative financial system. We also want to stimulate the competition and entrepreneurship in all member countries, because if you don't have entrepreneurs, you don't create enterprise, you don't create companies, then you don't develop the private sector. I mentioned earlier we want to support the creation of enabled business environments, talking with government, talking with regional institutions to help them to implement the best practice for the development of private sector. And they want to stimulate economic and social progress in all member countries, which would be the outcome of all the different pillars. In terms of figures, because we like figures and we like to commit ourselves, we have a target by 2020, which is the generation of 1 million jobs, the facilitate the access to finance for more than 1 million low-income individuals in all our member countries, build and develop more than 50 Islamic financial institutions, improve the overall business environment in 10 member countries, and the last one is mobilize the resource from the markets. My colleague from Tabun Haji has shown how we can mobilize resources from individuals. As long as we cover 52 countries, we want and we have to mobilize the resources from the capital market. And this is what we are doing now, and this is also one of the objectives of ICD. ICD, quickly to present you ICD, we can say that we're trying to differentiate ourselves with, let's say, 6 main factors. The first one is the family. We are part of the family, and I think I don't want to come again to the family, just to show that the family is important for us. We are a group, we have sister, and also we are growing. Now we have kids, as we have seen in Malaysia. We have also other siblings in Maldives Islamic banks. So we are family, and we share the value of a family. We are family, and also we are strong in terms of credit rating. Our mother has AAA rating, which is the best ever sovereign rating. We have AA rating. What does it mean? That means that we are solid to go and to mobilize resources in the capital markets. So if we are solid, that means that all member countries will be solid because they can benefit from that. And at the end of the day, the individual also will be able to benefit from this good rating. For the people who are very not familiar with the good rating, that means that we can buy money very cheap. And then if we buy money very cheap, that means that we can lend it to all our clients at a very good pricing. Also, the third, let's say, differentiating factor, it's on the innovative Islamic financial product. We do like, let's say, all the private equity, the commercial bank, the multilateral, but we do all of this using Sharia-compliant instruments. So we provide equity financing, we provide debt financing, we provide working capital facility. This is the direct investment and financing. We create financial institution, and my colleague Najmul Hassan will go in detail in all the financial institutions that we have created. So what do? We create banks, Islamic banks. We create Islamic mortgage company. We create Islamic leasing company. We create Islamic asset management company. And also a let's say, bank financial institution, like saving mobilization to help the pilgrim to go to Hajj, and also to mobilize saving from the population. Also, we support the banks and the newly created Islamic banks where we provide them line of finance. In a lot of countries, especially in Central Asia and in Sub-Saharan Africa, there is a lot of cash available in the market. But when the clients wants to see a bank, said, okay, I have a project that requires 5 to 6 year investment. The bank would tell him, yes, I have money, but only for 2 years. And then 2 years, nobody can invest. Nobody can finance capital expenditure in 2 years. So one of our mandates is also to support the financial institution by providing line of finance for longer tenure. So we can go up to 7 years with grace period. That will help this bank to finance the small and medium enterprise and also the private sector with longer tenure and maturity. So this is what we call the line of finance. We also have a department which provides advisory services to some government, to some private sector. And also we mobilize resources through asset management. And we do create, invest, seed, jointly with other investors, launch private equity fund. So a private equity fund, it's a fund that we invest on the equity of all the companies. We want to have what we call thematic private equity funds. For example, we believe that the food insecurity is a big challenge in GCC, in North Africa, in also a lot of countries where they cannot secure the supply of food. In the same time, we have a lot of member countries in Sub-Saharan Africa, in Central Asia, where they have a lot of natural resources, they have a lot of agriculture opportunity. So we want to mobilize resources where we're going to invest in this country, and also the production would be re-exported in the country where they cannot secure their food supply. So this is one of the thematic that we want to support, which is the food security. There is other thematic that we are supporting is the SME fund. And actually we have launched an SME fund in Saudi Arabia, which was 1 billion Saudi riyal. We team up with a lot of people, and together with joint efforts, we launch a fund that will invest in all the small and medium, let's say, projects that require some equity financing. So the ticket size could be very small. It could be $200,000. It could be $500,000. And then we're going to help them to make their dreams through, and then support them on how to launch their small and medium enterprise. So we have done one in Saudi Arabia. We have done one in Tunisia. After the revolution, we were the first one to come and to support the Tunisian people after the revolution. And now we're working on a fund for West Africa. We want to have a regional approach. And also we're looking at the SME fund in almost all the member countries. So this is for the asset management. I mentioned earlier that we're also working on supporting the government in terms of advisory. And we help the government to establish some special economic zone. So where the country has a competitive advantage, we want to help him to value this competitive advantage and to bring all the different players that can help him to value this competitive advantage and to make it like a strong asset for the government. We have an example, which is Mauritania. Mauritania and Ouadhibou. In Ouadhibou in Mauritania, maybe this is the best ever place if you want to fish, because I don't think you need to wait for more than 5 minutes. You can have fish easy and everywhere within a couple of seconds. The big issue is that when you catch the fish, then you need to store it, because fish doesn't like transportation, especially if there is no ice. So what we need storage capacity, we need food processing, and then we need to export. So now today we're very pleased to work with Mauritania and to work together to establish a very, let's say, fully fledged special economic zone where we can catch the fish, we can store it, we can process it, and then also we can export it. What we do in Mauritania, we want to do it in a lot of countries. Now working with Mozambique, also on the agribusiness, but we want to work with all the countries where they have identified a competitive advantage, somewhere where they think that they have everything. It could be vanilla in Comoros, it could be cotton in Benin. So we want to work with all these countries and trying to make all the feasibility study to have a systematic approach how we can value this competitive advantage. So this is for the advisory. Let me move a little bit faster on the solid strategy direction. our strategy has 4 pillars. First one is to develop the Islamic finance channel. Because if we don't have Islamic finance channel in all the country, it will be very difficult for people to understand what is Islamic finance. It will be very difficult for people to have an existing financial institution that promote Islamic finance. We need to be the pioneer on that, because this is a mandate, and also this is one of the main purposes of the creation of the Islamic Development Bank, is to promote and to spread Islamic finance. So that's why we're very, very active in creating Islamic financial channel. And also we want to use this channel to be for us a kind of leverage to reach individuals and also to reach small and medium enterprise. The second pillar is the direct financing. We are based in Jeddah, in Saudi Arabia, and from Jeddah we can provide direct financing to a lot of companies. What makes the big difference between us and the local banks? Local banks, usually they will give financing to somebody which is in their own country because they know the rules, they know the law, they know how to enforce security. From Jeddah, we can work in any country, because as long as we have signed and ratified the Article of Association with all member countries, we feel safe to go in all member countries. Of course, we feel safe to go also on a project which is very well articulated and where the feasibility study is very well formulated. The third pillar is the enabling environment. I think I've mentioned how we can help the entrepreneur to emerge, how we can help the country to value their competitive advantage. And the last one is the partnership, where we're going to mobilize resources and also working with others, multilateral development bank and also commercial bank. We are working with a lot of local partners, local banks, regional development financial institutions like IFC, BRD, in all the member countries. In terms of figures, as I told you earlier, one of the key pillars is the Islamic finance channel. So that's one of the reasons where, as of today, we have approved more than 43% of the total approval in finance. That means these are the channels that we have created. And I will present you briefly the different channels that we have. We also have a strong exposure on industry and mining, because this is a kind of infrastructure. This is heavy industry. And I think in order to develop the capabilities in all member countries, you need some time to go with heavy industry. So we have financed a lot of steel projects in a lot of countries, in Bangladesh, in Yemen, in Pakistan, that helps to consolidate the development of the private sector. Also, in terms of regional distribution, historically we have invested a lot in the MENA country, which is the Middle East and North Africa, for one simple reason, because these countries were a little bit more advanced in terms of Islamic finance regulatory framework. I give you an example. I think Dr. Azmi, he mentioned something that Iran is 100% Islamic finance. Sudan is 100% Islamic finance. What does it mean? You cannot get a conventional loan in Sudan. So everything you do in Sudan should be Sharia compliant. So for us, you don't have to go and to talk to the government, said, you need to amend the law, you need to change this. We can do it very quickly and fast. So that's one of the reasons. If you go to other countries like Egypt, there is an Islamic finance law existing. Morocco, they just passed the bill maybe a couple of weeks ago. So now we're trying to work on this. So the first step is to have a regulatory framework that will help us to invest in the country. Of course, we can use other, let's say, legal agreement, but if we don't have a regulatory framework, for example, to do ijara, which is leasing, it will be very challenging to us to be competitive, and also for the clients to bank with us. So this is the past. Let's go forward. Forward, we want to move, and we want actually to shift from MENA to Sub-Saharan Africa and to Central Asia. We believe that this is where also impact now is very important, and also this is where there is a new call for Islamic finance. If you see what's happening in Sub-Saharan Africa, every single day people say that, I don't want to bank with commercial bank, please come. It could be Cameroon, it could be Senegal, it could be Niger, it could be Benin. So we are moving there. Also in Central Asia, Kazakhstan is calling for Islamic finance, Tajikistan, Uzbekistan. So also we're trying to respond to all these requests from the country. In terms of financial institution, this is all the entities that we have created. There is, for you to understand this slide, there are two very easy rules. If there is no regulatory framework, we don't go for a bank, because a bank, if there is no regulatory framework, just avoid it. But if there is no regulatory framework, you can go for ijara, which is a kind of proxy. Ijara is a leasing. Ijara is the Arabic word for leasing. But leasing is very close to Islamic finance. And we think that if you start with the leasing, it will be very easy then to switch to either a bank or to a full ijara. So we have created a lot of leasing companies. In Central Asia, I think we have a leasing company in Tajikistan, Uzbekistan, Kazakhstan, Azerbaijan, Albania, and we are also in Kyrgyzstan, and we're looking forward to open one in Turkmenistan and in Turkey. So we are covering all the countries. If you go to other country, we just opened one in Palestine, and we're very proud to be able to operate in Palestine. And also we are looking for Ijara, which is leasing company in West Africa. In terms of development on non-financial sector through the direct investment, just to give you some idea about the type of instrument that we use, leasing, equity investments, and then the other instrument or debts, and also in terms of accumulated disbursements. So you can see that we have reached close to $1 billion of disbursements, and again, 66 in the MENA region, which is for us something that we need now to diversify. And as of today, we have been able to reach 31 countries out of 52. Out of 52, that means that 21 countries, we have not been able to reach them. It's not because we don't have projects, maybe because the projects are not materialized yet, or because we're also working with them to improve the regulatory framework. In terms of advisory, and just to give you some information on what we're doing in advisory, you know, we are doing a lot of advisory to structure projects. It could be a cement, it could be a conversion of existing conventional bank into Islamic bank. And I think this project has been very successful. A lot of banks conventionally say that, please help us. Our clients want to switch to Islamic banks. How can we do that? Do we have to switch 100% to Islamic bank, or can we set up an Islamic window? And actually, we're helping them. It could be in Cameroon with Afriland. Now we have opportunity in working in Tunisia to convert a non-Islamic bank to an Islamic bank, a leasing actually company to an Islamic bank. We're working also for a leasing company in Senegal to convert them and also to transform them into Islamic. So this is something which is very popular in all Africa, from the north to South Africa, and even to Central Asia. And also in terms of advisory, now we are also helping the government to mobilize, let's say, Islamic money. Islamic money, this is in the capital markets. Usually the government, they used to get funds from conventional, but as long as there is a lot of Islamic bank having some excess liquidity, I think it's an opportunity for a lot of government to tap into this liquidity. And now last year we have successfully launched the first sukuk in Senegal, which was in local currency. So imagine you have a lot of Senegalese people, or even in all West Africa, they have savings, but they don't mobilize it for Hajj, not yet. We hope that we're going to mobilize it for Hajj. But they just keep the saving at home because they don't want to invest in non-Sharia products. This is their right. If they want to do it, nobody can force them. So actually, we came with a product where they would be able to mobilize these savings and also to finance the government. So it was a win-win, I think, product where the government was happy because he was able to tap a new class of investor, and also the individual would be able also to bank and to use their savings. Of course, we have individual, but also we have institutional from Middle East who have excess capacity and looking for investment in non-GCC country. So this is what we call the sukuk. And now last week we have We have signed with Niger to work on the sukuk. We're working with Tunisia also, work on sukuk. We're working also with another country in Central Africa. And now we have to, just to manage expectation because our team is very busy and we wish that we will be able to work with a lot of countries. Because it's a kind of technology that you can easily duplicate. The beauty of West Africa is the regional integration. If you do something in Senegal, you can duplicate it in Niger, because this is the same regulatory framework for all the monetary policy. So we wish that we do something in Central Africa. For example, you do something in Gabon, you can duplicate it in Chad or in Cameroon. So this is where we want also to be the first one to help the government to mobilize this kind of resource. So this is the fund that we have mobilized in asset management, and this is all the fund I told you, the Sme Fund. We're targeting Brunei, Bangladesh, Southeast Asia, Mozambique, Kazakhstan, Bahrain, MENA, West Africa, Algeria. So this is all the Sme Fund. And also these are some funds that we are targeting on the special theme. I mentioned the food insecurity that we want to address, but also the renewable energy. Renewable energy is very, very important for the development of the private sector because power generation is a big challenge, especially in Africa. So if you just rely on, let's say, energy done by, fueled by oil or by coal, I think you're always tied with the international price of the commodity. There's a lot of countries, for example, in Uganda, where hydropower exists. They have a lot of water, but unfortunately, they don't have this kind of investment that will focus on that. So we want to set up a fund that will invest exclusively in this type of energy. It could be wind power, it could be hydropower, it could be solar power. So this is all this kind of energy. But again, if you want to do renewable energy, you need a regulatory framework because you need to allow IPP, independent power producer, to do some power generation projects. You need to also have a lot of steps where the government will enter into what we call a power purchase agreement, whereby it will buy this electricity and then distribute it in this grid. So we're also helping the government. Now, recently, we're working on some project in Jordan because Jordan has just adopted a new bill to allow renewable energy. Kazakhstan also is working on that. So these are the countries that we target and the countries that are member in North Africa, Sub-Saharan Africa, Southeast Asia, CIS, Turkey, Middle East, and also in Suriname. Suriname is the country, is a member country in South America, which is also a member of ICD. And we're looking for opportunity. So all these countries today, if you're an investor, these are countries that offer a lot of opportunity to growth. As you may see, we have no country from the, let's say, the north, only South-South cooperation. So we are one of the few organizations that do only South-South cooperation. And also as an investor, we can find a lot of opportunity. Actually, we can also bring you a lot of opportunity because we have access to all of these countries. We have access to 52 countries where we can identify a lot of opportunity for you as an investor or as a co-financer. In terms of realization, what we have done, we have today 8 Islamic commercial banks. We have mentioned one in Maldives. We have one in Pakistan. We have one in Sudan. We have one in Mauritania. We have one in Niger. We have one in Bahrain. We have one in Guinea. So we have, and actually we are growing because in West Africa, we operate through a holding which is jointly owned by ICD and Bank Asia from Turkey. And this holding owns regional banks, Mauritania, Niger, and Guinea. And we want to expand in West Africa. We have a bank in Sudan, and also we're looking for opportunity in all member countries. So if you have a bank and you want to expand, we can work together. If you have a project and you are solid, we can also work together. We have, as I said earlier, we have 6 leasing companies. I think this figure, is not up to date. I think we have more than this. As I mentioned, we have a lot in CIS, and we have now one in Sudan, Palestine, we work in Egypt, we're working in Algeria, working project in in West Africa. Also, we have a lot of advisory companies. One of them is Tabun Haji. We have investment bank in Saudi Arabia, which is Anfal Capital. We have advisory company which focus only on the mortgage finance to help the Muslim to have their own Islamic mortgage companies. Because, you know, the Muslim at the end of the day, you know, we want to live like everybody. We want to have like a property. We want to bank. We want to travel. But we just want to do it according to a value. So that's why we're trying to create and to support all these companies that can provide advisory support to get Islamic mortgage. In terms of, quickly, I just give you a case studies, and I think my colleague will elaborate on that. This is a bank that we have in West Africa, I mentioned earlier. So we are active in 4 countries. I just missed Senegal. And we are going to expand. So we are going to expand in all the other West Africa. So we're looking for Benin, Côte d'Ivoire, Mali. We want to expand. And for us, it's very important that we continue to expand because the demand is very high in this part of the world. And we are growing, but I want to say that we're not going that fast. We are doing our best, but now we need to continue to grow, and actually that's why we are going to other countries. And also every time we go to a new country, we like to identify potential local partners. We don't have the pretension to say that from Jeddah we know everywhere, we know everything everywhere. No, we partner with local people. We need local people. We are here to serve the private sector. We're not here to come and to take over the private sector. We're here to work together and to have like the knowledge of the local player to help us how to target the private sector. And this is the second case, which you see it's a little bit sophisticated. So that's why I show you that Islamic finance is high-end, because sophistication, this is what people they expect for high-end industry. They don't want to take something easy, even if simplicity is the ultimate sophistication. But this is the kind of structure that we have been able to do in order to get some people that usually don't buy this kind of paper. This kind of paper, this is like this sukuk. So we team up with Senegal, and we have been able to mobilize, I think it was $200 million with them. And for the first time in the history of Senegal. And we're very proud of this. And we wish that in the future, we'll be able to come and to showcase the same, let's say, track record, but not for Senegal, for other countries in West Africa and even in Central Asia or in all member countries. Thank you very much for your time, and I wish I can answer all your questions. Thank you very much.
Thank you. Thank you very much, Mr. Farid. After finalizing or after knowing ICD and its role in contribution in the high-end industry, now let's go deep and talk about the eligibility of high-end industry for financing. Mr. Rudolph, the Director of Direct Investment and Finance Department, ICD, will present this second topic of the second session. Thank you.
Assalamu alaikum. So just to tell you a bit about myself, I'm French, I'm Muslim. I've worked in MENA for the past 10 years, and now I work with the ICD, which is a bit like the IFC, but for the Islamic Development Bank. And Farid told you what we are, told you what ICD is doing. What we do is that we invest in 52 member countries. This is where we invest, the green countries. So we do Africa, Middle East, Central Asia, Southeast Asia, a bit of Latin America. And I'm head of the direct investments department. Well, that means that I do equity, debt, mezzanine investment in all those countries. So if you have companies that need some financing, debt, equity, or mezz, you can come to us. We can discuss how it works, but this is essentially what we do. We are one-stop shop, so equity, mezz, senior debt. We can go long-term. So we are talking about high industries. We'll go more into that later on. But what's interesting is that we are not like a private equity fund. We don't have to sell after 2 to 5 years. So we can work with companies that are growing across our member countries and stick with them for 5, 10, 15 years if they are good, both financially and in terms of development impact. We can add some value, help them to grow. And we are unique in the sense that we are the only development bank that is focused on Islamic finance. If you look at all the other guys, they're just conventional lending. So that's what we do. It's a quick summary of what Farid was saying. Now, this presentation is supposed to be about high-end industries. And what is a high-end industry? That's a big question. I mean, does it mean that this is luxury products? Could be something brand, cosmetics, perfume, real estate, primarily real estate. Or is it something that is high-end in terms of knowledge? So is it financial services, pharmacy, education, information technology? I mean, it could be, it's quite broad. If you say high-end, you don't know. If you think about it, because we're in Dubai, it seems very much like the story of Dubai. It's very much shopping malls. It's very much knowledge workers, premium real estate. So on one hand, yes, it seems like UAE. On the other hand, it's very much also aligned with the development of the middle class across all the green countries I mentioned before. So it could be both. Now, if you think about it, we are a development bank. So we think about developing countries. So we think about creating jobs. Now, what are the characteristics of high-end industries in terms of job creation? So on this little chart, it's used, it's done based on the database that the United Nations is using to develop their global investment report. So they look at cross-border investments, foreign direct investments, and they have very good studies, very good information. Now, if you look at this axis, the vertical one, that's the number of companies that went from one country, anywhere in the world, to our member countries, the green countries. And the other axis is how many jobs they created. So many companies, many jobs. So you have two broad categories. One is the top one there, business services, financial services, software. This is the knowledge guys. And then on the bottom you have the brands like textile or hotel or real estate, the second category. So they are quite different because if you look in the knowledge companies, you have you have many companies, right? Smaller companies maybe, creating a few jobs. And then the other categories, you have a few big companies, big guys, creating many jobs. But all of them combined have a big job creation impact. Now, this is the knowledge economy. So where do they go? They go very much to Malaysia, UAE. And then you have a second category, Qatar, Bahrain, Egypt, Morocco, Indonesia, Saudi Arabia, Turkey. And then you have the rest, the other countries. We also want to develop those countries and bring some knowledge economy businesses there. I mean, if you look at, for example, in Africa, business services is growing like crazy in terms of foreign direct investment. Doesn't appear yet. The statistic is based on what has happened between 2003 to now. But if you look at the more recent statistics, you see different signals. Just a quick summary. Hotel and tourism, this is very much UAE. And then after that, second group, Egypt, Qatar, Saudi Arabia, Turkey, Morocco. And then the third category, Indonesia, Jordan, I won't list them all. So what's interesting that you have different positioning depending on what you call high-end industry. If you look at brands, for example, cosmetics, then it becomes very much, do you have a big growing middle class? So you see, for example, Indonesia, big time. And then you have all those countries like Bangladesh or Turkey or Malaysia, Morocco, Egypt. And then the other ones like Nigeria, Pakistan, who are going to move to the right, to the top right of the chart. But they are taking a bit more time than, for example, Indonesia. Now, for Islamic finance, I don't know how familiar you are with Islamic finance, and we spoke a lot already about it, but it's not that complicated. One, you share risk. Two, you don't do certain sectors. I won't go back to what has been done before, but one of the things that we have to deal with when we try to develop companies across our member countries, sometimes people do not understand Islamic finance. If I say to somebody, let's do a leasing deal, they get it. But if I say, let's do an ijara, they don't understand. So a lot of it is try to explain to people what is Islamic finance. And then in some other aspect, we need to innovate a little bit. Like, for example, Islamic finance has been historically very much based on real assets. If you do high industry, if you do the knowledge economy, like a software company, you don't have real assets, you have software. How do you structure a Shariah compliant deal without real assets? Well, you can do it. I mean, you can do it easily if you do equity. You can also do it with debt, but depending on where you do it, people are more or less used to it. The person that you saw before, for example, from Malaysia, they do it all the time. But in GCC, Islamic finance on intangible assets is something more recent. This will grow. We are, for example, I'm currently looking at a software company in Dubai, and we are going to do a debt structure. This is new. It doesn't happen very much. In terms of transaction, if you come to ICD and say, okay, I would like some funding, depending on whether you want term finance, debt, or whether you want equity, the constraints are different. If you want debt, we can mix debt with conventional debt without any problem, as long as it's within a Shariah compliant sector. But if you do equity, then what we will ask is that your company will convert, if it's an existing business, will convert progressively to Shariah compliant financing for the rest of the debt. So equity more constraining, debt less constraining. Now, what we really care about also is growth, because we are a development bank. Now, one thing that we like about high industries is that they grow a lot, whether it's knowledge or whether it's the consumer goods. And one thing that is very important about growth companies is that across the world, 5% of companies generate more than 50% of the jobs. That's very, very important to keep in mind, because it's true in Africa, it's true in Central Asia, it's true in Southeast Asia, it's true anywhere else in the world. So it's very important for us to focus on companies that are growing and make them bigger. This idea actually is very important also when you want to develop the private sector, because many people say, let's develop SMEs, and they think, okay, 80% or 90% of the jobs are in SMEs, let's focus on small companies to create jobs. But if you invest, let's say, in a hairdresser with 5 people today and 5 people in 10 years, is it going to have a job impact? No. What matters is not the size, it's the growth of the company. Whether it's a scalable business, whether that small business will go from 5 to 50 to 100, rather than just the size. So what we look for is, whether it's a small, a medium, or a large company, we look for scalability, we look for growth. And what's interesting is that wherever you look in the world, growth companies go through stages. They can take a short time or a long time to go to an inflection point, and then after that they speed up. They grow much faster. So what we want to do, we want to catch them when they are about to take off, and then work with them over the long run to make them have a bigger impact in all our member countries. So for example, if you think about Africa, Middle East, Central Asia, many people are going to tell you, which industry do you focus on? Yes, that can be interesting if you have a specific industry expertise. But in most of our member countries, the key is not so much to find a growing industry, because everything is growing. I mean, if consumer goods is growing, education is growing, pharmaceutical is growing, various types of services are growing. The key is to find a company that knows how to execute. It's tougher to find a good entrepreneur than to find a good industry in our member countries. So we focus on the woman or the guy who has been successful, and then we work with them over the long run. Another thing that is interesting is, if you look at foreign direct investments, and if you look at the jobs created by foreign direct investments in knowledge industries, where are the jobs coming from? And what we see that there is a relatively small percentage of companies in knowledge industries, actually in other industries, that are created in terms of foreign direct investments by companies from our member countries. So somebody, let's say in UAE, goes to Morocco and creates something. What we find is that you still have many companies, many jobs that are created from companies that are not in our member countries. So we need to keep that in mind. And one of the reasons is because when you think about foreign direct investments, you need to be big enough. Let's say you are in Nigeria and you want to go to Morocco, you need to have a company that is big enough to go international. And you need to also to be in a situation where you don't find enough growth in your domestic market to start thinking about going elsewhere. And what happens is that since our member countries are already growing very much at home, they focus on the home market much longer before going international. Well, that's for knowledge industries. That's for across industries. So that's member countries is Muslim countries covered by ICD, 52 countries. So that means that if you want to do high-end industries, you need to focus on those countries where we are already active, but you need to find a way to work with the guys who are not in the member countries and who are going to come to, let's say, Nigeria or Pakistan or elsewhere. Now, if the priority is the guys from the member country, so we want to find companies, let's say, that are in Turkey and growing fast in knowledge industry. So what are we going to look for first? We want to find a company, if you want to go international with them, a company that is sufficiently structured. If you work with a startup, it's too small. I mean, it cannot go from Turkey to Morocco, for example. So they need a minimal structure. Then they need to have already an existing track record of success. So we're going to look at companies where the EBITDA or the sales have been growing at, let's say, 10% on average per year over 3-5 years. We like when it's consistent, because when you have consistent growth, it means the management is doing something right. We also want to look at companies that have been profitable for at least 2 to 3 years. That's also interesting. So if you have companies in our member countries, the green countries I mentioned before, and they are like that, you need to talk to us. Another important point is that we can give time to those companies. For example, many people here are from Africa. In Africa, you need to have time to grow across markets because you can't buy your way through growth completely. You have to do some greenfield projects. You can do both, but the greenfield projects are important. Now, if you want to do a greenfield project, you need to give the management the time to develop the business. That we can do. It's very different from a private equity fund, the example I was giving earlier on, where they invest in your company and they stay 2 to 5 years. We can stay 10 years if necessary. We can help also to reduce the risk of international expansion. Because if you go, let's say, you're already operating in one member country. You know everybody in that member country. You know how to manage risk in that member country. But let's say you're going to go to a different part of your region. You are, let's say, in Malaysia, you go to Saudi Arabia, or you go to Kazakhstan. Maybe you're a bit worried because you don't know the environment as well. And you may be worried that some of the big players there will use your relative ignorance of that new market to create you some problems. If you are with ICD, we are a multilateral development bank. Nothing is going to happen to you. So if you think about developing your company internationally, if you do it with ICD, you're in a much better shape. Another thing that is important for us, it's also very Islamic in a way, is that finance has to serve the business, not the other way around. So you don't want to do some kind of financial engineering on the company just to make a quick profit on the business. What you want is to give the tool and the time of that company to grow across our member countries. By the way, if you have some questions in anything I say, you can interrupt me. Huh? This is an interesting story. It's like the Gap of Turkey. It's a $500 million company growing at 30% per year. It's going from Turkey to Kazakhstan to Saudi Arabia. It's sourcing its products in Bangladesh. It's a super story. So there are type of companies that are starting in Turkey, going international, and in a few years you're going to hear from them because they probably go to do an IPO in Turkey. Well, that's what I mentioned. Before I go to the other thing, I'm also looking at other transactions, like I mentioned the software company. That's in Dubai. We're also looking at GCC companies going to Africa and retail. So that's local companies going to other member countries. Now, another way that we could also increase FDIs in our member countries to help, for example, GCC companies to go shopping outside our member countries and then develop their business back to Middle East or Africa or Central Asia. That's interesting for several reasons. If you are in Saudi Arabia and you buy a good brand, fast-growing businesses, you are going to pay at least 8 times EBITDA minimum. Whereas if you already have this business in Saudi Arabia that is big enough to start going international, they can buy another company, let's say in Europe, maximum 8 times EBITDA, 5 to 8 times. So they can buy, they're already operating, let's say in consumer goods or cosmetics, they buy some smaller companies outside our member countries and they bring them back to our member countries. So if you look at this company, Jones the Grocer, there is a private equity fund managed by El Capital, it's Louis Vuitton. So we're talking about high industries, this is an example. What did they do? They bought that company in Australia and they brought it to our member countries in Dubai. And now if you look at what's happening in Dubai or Abu Dhabi or Qatar, you have this type of restaurant, Jones the Grocer. So you could imagine a company, like big company in GCC, because the GCC is very active in terms of international M&A, doing the same thing. That's possible. And then the next stop, they would go to North Africa or they would go to Central Asia, wherever. So that's possible. This is another story. This is guys who were in France, and then they went to Oman, they went to Saudi Arabia, same company that is doing also the food in ICD. And this is Nux. This is a cosmetic company who also came to the region. Now, to summarize, you can talk to ICD if you are looking to develop an existing company. So we look for growth. We look for a profitable company. And if it's equity, we want to put at least 5 million. If it's debt, we want to put $5 to $50 million. And the best way to start talking to us, if you have this type of company in mind, is if you give us net sales, EBITDA, net income for the past 5 years, we see the growth trend, and then we can start working together. If there's a debt deal, if there is a greenfield project, so it's not an existing company, a new company started from scratch, in that case, what we're going to be looking for is the quality, what we are going to assess is the quality of the sponsor. So if, let's say, if somebody is running a hotel company and they want to go to do, I don't know, something completely different, it's not very reassuring for us. But if you are working in the same industry and you already have a track record of success and you want to develop something from scratch, then you need to talk to us. That's interesting. Again, in that case, we're going to look at the track record, not of the target company, because there is no, it's a greenfield, it's a new company, but we're going to look at the sponsor. So it could be somebody from Saudi Arabia or from Nigeria going to a new country, and then we can work with them. Okay, that's it. Thank you.
Thank you, Mr. Adolphe. Now let's be more practical. And let's talk about some case studies with Mr. Najmul Hassan, the Director of the Financial Institution Development Department, will talk about. Please, Mr. Najm, the floor is yours in order to talk about success stories and case studies. Thank you.
Bismillahir Rahmanir Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Najmul Hassan. I look after the Financial Institution and Development Department within ICD. And I'm going to just take another about 25 minutes to go through some of the, the success stories that we've had and how we have utilized Islamic finance for the high-end industry. What I'm going to really cover upon are mainly the objective of the presentation, which you all understand, give you a brief introduction. Also talk about the market reach that we have. Within Financial Institution Development Department, we do not go directly to invest in a country, but what we do is we create a channel in that country. And a channel would be like a financial institution, a bank or a leasing company, which we call an Ijara company, or a mortgage company or a investment company. And we would support them so that these channels are able to look at the local risk. Because what we realize is that across the band that we have, the 52 countries, the credit risk is best understood by people who are there in the market. They understand the growth. They also understand how to take a credit risk. So we use our channels to do that. So we facilitate in setting up the channels. And then these channels, through these channels, we can help specific SMEs or companies who are looking to grow. Now, so basically, I will just brief you about the cases that we have had. Obviously, we have just taken about 4 or 5 small success stories. These are entrepreneurs who came in and then who, through our various channels, we were able to support them, and then they were able to grow. And I'll also just shed light on the investment banks, the investee banks that we have, the 10 banks that I just talked about, how important they are as a channel for us, and then discuss the case study. So this is where we move forward. I think you've heard all about ICDs and the role that ICD is playing. Within that, I'm not going to go into too much of discussion on it. Brother Farid and Rudolph have already covered that, but that ICD should be looked upon as the IFC of the World Bank, and we are really looking after the private sector investment in the in the member countries. Now, within ICD, this is how we are typically organized. So just sort of, you get a flavor of how do we work. We have the Financial Institution Development Department, and that's the department that I look after, which is FIDD, as we call it, direct investment. We've just heard Rudolph. He's there with us. Advisory is another department, which is advisory and asset management. We have many funds that we have. We have money market fund, we have Islamic banking growth funds, we have clean energy funds, etc. That's handled by the asset management side. And then we heard Farid on the business development, because it's the business development which really goes into the market, looks at opportunities, and then filters them down, and then gives them either to DIFD, which is direct investment, or to the Financial Institution Development Department, which is banks and non-banking financial institutions, and also the line of finance. So this is what ICD, this is what is really the support that's coming in for the growth of high-end industries, from direct investment, line of finance, also through through the investment in various funds. Now, if you look at the market reach that we have, we are all over the place. I think the chart got a little scattered here and there, but we also do support through our own financial institutions and financial institutions within the member countries by giving them a line of finance. A line of finance typically would be a line of 30 or 40 million US dollars, which we would be actually giving to a financial institution. And through that line of finance, the financial institution would be actually going in and doing investment in the SMEs. So we have a line of finance in 26 different financial institutions. We do not have any equity investments in them, but these are in Azerbaijan, Uzbekistan, Tajikistan, Turkey, Nigeria, Yemen, and Indonesia. We are now increasing that to Bangladesh. We are moving into other countries. So this is like the line of finance function that we are doing. Besides this, we have 10 banks with us where we have done direct investments. These banks have, in some cases, we have a majority shareholding, like we heard Brother Haris Harun, a bank in Maldives where ICD is 85% shareholder and 15% is by the government of Maldives. In certain cases, we have a very small shareholding, but typically we would be looking at a shareholding of between 20 to 30% within a financial institution. Now, in progress, what we have is a bank in Tunisia where we are coming in by the end of this year. We are opening up the Islamic bank over there where we have about 30% investment. We are also now working on another initiative which is in Kazakhstan to open up a bank over there. And we are also progressing towards Benin and Mali and Cote d'Ivoire, three of our member countries where we intend to open up the first Islamic bank. Now, you see, this is where ICD comes in, because typically these are small markets, and typically these are markets where an entrepreneur or someone who is going to be looking for an equity investment, he doesn't find it very interesting because the markets are very small, the markets are fragmented, Islamic banking has not been tried, and as a result, the risks are to mitigate the risks, you don't have instruments available, and this is where ICD would come in. And ICD would come in and invest into these markets because we understand how to structure and make a bank and make it profitable. The example that Haris had given, Maldives, a country where no one was wanting to invest. And as a result, we went directly and we took a share of 85% in that bank. And alhamdulillah, in about 18 months, the bank became profitable and it has a great return on equity. Last year, it was about 11% and growing to nearly about 20-25% in the coming years. This is how we really structure, we really do it. What we have is really a bank in a box. We can actually open that bank in a country which has a population as small as 300,000 or can have 180 or 190 million like we have done in Pakistan. These are some of the banks where we have the line of finance. I talked about 26 institutions where we are given line of finance. Some of the banks are being shown over here. Obviously, not all of them are indicated, through whom we are doing through the financial institution department. Like I said, sometimes we don't open a bank. We would use the existing channels that are there, give them a line of finance, and then use them to finance various projects of SMEs in that country. So this is our line of finance, market reach for that. These are some of the banks that we have, the 10 banks and 9 leasing companies and 11 non-banking financial institutions. And non-banking financial institution would be like a company which is doing a mortgage or a company which is like working as an investment bank. So some of them that you can see, Caspian Investment and many of the leasing companies that we have. So this is typically, if you look at ICD going forward, we would like to actually increase our presence in our member countries and to have a channel available in all the 52 countries which are member. So we need to have either a non-banking financial institution or a financial institution or a leasing company in all our member countries. So we have a huge task to grow in the next 20 years. Now let's just spotlight on some of the key investment. I'm not really covering all the banks over here. We have set up a holding company in Africa, in West Africa, and this is by the name of Tamwil. This is where we have a partnership with a Turkish bank over here, Bank Asia, and we have a 60% shareholding and Bank Asia has a 40% shareholding. Under Tamwil, Tamwil is like a holding company. But under Tamwil, we have, this has a headquarters in Dakar, and what we have under Tamwil is 4 banks. Like I said earlier, the real challenge for us is that these are very small markets. By itself, it's very difficult to provide the best practices to have a good management in these banks. So what we do is we create a holding company, and through this holding company, we are able to provide services like IT platform. So it's a common IT platform which is shared by these four banks that we have set up. We would also look at the credit risk being controlled by the holding company. We would also be looking at operational risks, which are also held by done by the holding company. So we have 4 banks in Senegal, in Niger, in Guinea, in Mauritania, and now we are looking to put three more countries under Tamwil. One of them in Niger, one of them in Mali, in Benin, and in Cote d'Ivoire. So we will have under Tamwil 7 different banks held under Tamwil as a holding company. So this is what, as we go forward, this is what we are really doing. Now, Tamwil, I don't want to cover up all these banks, but they have been there in existence. We purchased them. Some of these banks were not initially Islamic banks, but were conventional banks. We took over major shareholding under Tamwil and then converted them. And from there on, we are moving forward. Haris covered up Maldives Islamic Bank, but clearly Maldives is one of the examples that we always give to stress the point that sometimes it's not the critical number of people that is important. People say, oh, Maldives is too small a country. What would $15 million do to you? But I think this is where we can show that because we have the ability to be able to set up banks in very small countries, and they can be, I'm not so sure if there's any other country which has a population less than 300,000. So this is what we are doing. We're actually now working with Brunei, because Brunei is another country where we are putting up a channel, a leasing company, and also a bank, and Brunei has about 450,000 people. So this is what we are focusing. And as of now, I think within Mali, which has a population of around about 100,000 only, almost 30% of the people are banking with us. So we have a huge penetration. And a lot of these people were not actually in the banking, were not banking because of Sharia reason. They didn't want to actually take, have a relationship with the conventional bank, but because of Maldives Islamic Bank, they were able to do that. So we have brought a lot of people who were not in the banking sector to become useful for us. Another bank that we have is in Pakistan, Burj Bank, where we have a 33% shareholding. And this bank has, there's a huge market in Pakistan, obviously 180 million people. So you can see from two examples, from such a small country to such a large country, from 300,000 now going to 180,000. But here we have come in partnership with Bank Al Khair, which is based out of Bahrain. And between the two of us, we hold nearly 70% share of this bank. And so this is, bank has used technology in big time, going in with internet banking and credit cards, etc. And so therefore it is working now. Let me just come on to some of the case studies of what we have done, especially in the sector of high-end. Awari Hotels, this is one of the hotel chains that is there in Pakistan through Burj Bank. We didn't want to take a direct exposure with them. But what we did was we nudged our bank to look at this credit, and if this credit risk was acceptable to them, to be able to support this bank for its growth, both internally within the country, and then they also wanted to expand out in Dubai and have a 4-star hotel and apartment done over here. So this is where we came in and helped through our channel. So the credit risk is controlled by Burj Bank. What ICD is really doing is using the bank as a channel to be able to help growth of this industry. So this is like a 3- and 4-star hotel chain, and as a result, we are helping them, finance and increase their reach into different markets. I just want to give you a flavor. This whole syndication for this for the growth was about $15 million, in which our bank, Burj Bank, participated in $3 million. They came in with the $3 million, and then they syndicated the rest, which is $12 million. They syndicated to other financial institutions. So this is where we are able to then have a multiplying effect that not only, with just $3 million, we were able to get other banks to join partnership with us because the credit risk was acceptable to them. So we were able to do a 5-year facility and have that multiplying effect, because one of the constraints that we do see in ICD is the fact that we have a limited amount of equity. I mean, obviously, everyone will say we have a limitations as far as our growth, how much dollars we can invest. But when we come in, we look at not just only putting in money on the table, but we also bring in with that a lot of our expertise vis-a-vis understanding the credit, understanding the market. So we are able to attract other financial players to come in and participate with us in various syndicated financing facilities. A small SME business, Misbah Cosmetics, again, a company which we did through Burj Bank. They came in and they wanted to start up a facility for doing this halal beauty products, various types of creams, et cetera. And so therefore, here again, we used our channel because this account was so small that potentially we could not handle it from the platform of ICD in Jeddah. So what we did was we had our channel to look at this, and so therefore they started to work with them, and as a result, the business has expanded. And this is where we are actually helping the women entrepreneur side of the business, because not only is this business employing a large number of women, because it's typically focusing on to women of the age of maybe 18 to 40, 45 or so, and providing product to them, but also this business is also in the sense doing a lot of corporate social responsibility, because they're also helping women who have had problem because of this acid burn victims, etc. So these are 2 cases that we are doing. So again, Burj Bank came in, and like over there, we did $3 million. Here we are just doing it with $0.35 million. Like I said, this is the reason why this business has been successful is because of a financial institution, and the cost of doing business was very small. Even for a facility as small as $350,000, we were able to do that and continue to increase. Textile is a big time product for us. In fashion, again, one of the largest industries that one can tackle into. So we have Gulama Textile, large exporter of various products that is being done, starting from spinning to weaving into making high fashion garments and stitching, etc. And they have a domestic operation which is very large. And here we work through Burj Bank for a working capital of $8 million and help this company to expand their brand and reach to other markets. Again, Crescent Bahuman is also a company which is in denim products, because they make fashion denim products, jeans and tops, etc. So they are working with Marks and Spencers and Levi's and Adidas. And here again, we came in with Burj Bank to be able to support these in order for them to be able to have the kind of compliance that is now needed by most of these multinationals to buy products from a country. And as a result, we were able to do that. We also worked with our bank in Maldives, a company called Villa, through a group called Villa Air. They started a new airline called Fly Me. And the purpose of Fly Me was to provide connectivity to the tourists, because like Haris said, that in Maldives there are about, I think, 1,200 islands or something like that, and a lot of them are scattered over, and it takes from between Mali to the further end, probably it'll take you 3 days or 4 days by boat. And so therefore we are working with a company called Fly Me, and they are operating like a airline which is helping support tourists being transported from one island to the other island. They have 6 short-haul aircraft which belong to their family. This is a part of a group which is called Villa Group. They are in shipping as well as trading, as well as in domestic airlines. So this is, again, we are supporting the Villa as a project through our bank in Maldives. So like I said, using this as an example of how we can support local industry over there. One example that Haris shared with us was of fishing. Horizon Fishing is another company that we are doing in Maldives. This is, again, specializing in yellow tuna, where they can it and then pouch it, and then they send it to top-end stores in UK, Harrods, etc. If you see, their product would be available over there. Here, we have actually provided a very large facility, which is about $20 million, which is a state-of-art facility, from tuna fish to be caught, to be sort of frozen, and then to work on that, cleaning it and canning it, and then exporting it out. So this is a $20 million facility just for fishing, but again, high end as far as food chain is concerned. Last of the product, the example that I am going to show over here to you is in technology, which is being done with Turkey. This is being financed through a line of finance. Again, I'm trying to give you example of various ways in which we can reach to our final customer. In this, we have given a $5 million line of finance through a $20 million line of finance that was given to Active Bank in Turkey. Active Bank is a conventional bank. It's working in Turkey. And they wanted to do Sharia-compliant SME financing, because they wanted to finance into various technology products. And one of them was for this. This is basically a company, it's which is basically responsible for collecting fares. So it is using technology for people to pay for their football match and for traveling on a bus, etc. So they have technology for that, for car application, for ticket sales, and doing that. So this company is called ePost. Again, we couldn't possibly have financed this from ICD itself, because the amount of financing was just too small. It was not part of our appetite. So therefore, we actually worked with Active Bank. To Active, we gave a $20 million financing line, and then part of that was being used for many of these technology companies to be able to do that. So these are some of the examples that I think I can show you. What I can really tell you is, as far as ICD is concerned, as long as the industry does not fall in a category which is physically or morally hazardous. Physically hazardous mean it's in smoking or alcohol or foods which are non-halal, etc. That's physical. Morally hazardous would mean companies which are probably in gambling and other areas where we would not like to invest, maybe movies, etc., restricted entertainment, etc. Other than that, I think we would have a solution to be able to finance various operations, whether they are very small, as you saw the case of Misbah, only $350,000, running up to something like $30,000 to $40,000. We have a wide range of products to be able to meet them and to be able to process them much faster, because we can use our channels. So if there are business requirements in each of these countries, sometimes we would actually prefer them to be handled through our own channels, because the channels will be able to much better understand the business and to be able to finalize the transaction in a shorter period of time. So we will continue to increase our reach through Sharia compliant for the high-end industry. In our member countries, we have direct investments, which Rudolph looks after. We have line of finance, which is what comes under the FIDD, and then we have financing through the investment banks, to the investee banks that we have, through the Ijara companies that we have, through the non-banking financial institutions that we have. So I'm going to stop over here and thank you all for being patient. And if you have questions now or later, I'll be most delighted to answer.
Thank you. Thank you, Mr. Najm. Now, by this presentation of Mr. Najm, now we come to the end of the workshop. And if you have any question, if you would like to ask any question to the speaker, they are around, and if you can meet them here in the workshop, and then the coffee break, or in the even tomorrow in the workshop, or in the seminar or the forum, then they will be available. By the end, I would like to thank you for your attention, and I would like to thank the speakers for their intervention. Thank you very much.